let's talk about the risky behavior continues just to amaze me, Chase, a lot of smart people in the industry, because many people point out that we have missed the boat on crypto. But I continue to worry about the space long term, as there is just no true way to value what these cryptocurrencies are worth. While this is a major concern for our firm, I would say leverage in the space is another major risk. You never even thought about the leverage, but it is out there as well. A big problem is the rules and regulations, and ultimately the transparency is not as clear as when you invest in public companies. There's so many things behind the scenes here, behind the curtain, that people don't realize, and it's just another risk added on top of risk.
Yeah, and I always think it's funny when you listen to people and the way they get their target sell price on Bitcoin is like, well, if everybody buys 1% of Bitcoin in their portfolio, it's going to be worth this. And it's like, you could say that for anything.
Yeah,
if everybody buys 1% of JP Morgan Chase in their portfolio, it's going to be worth this. It's like, it just makes no sense. And we talked a lot about gold last week, and to me, cryptocurrencies are even worse than gold, because at least gold, you get the shiny piece of metal. With cryptocurrencies, there is, again, just no way to value it. No earnings, no cash flow, no interest. It's just not possible to really come up with an intrinsic value of what cryptocurrencies are worth. And you mentioned the leverage, and this is what really, I'm just going to say, was jaw-dropping to me. I read an article on CNBC, and the leverage was insane, and I bet most investors have no clue about it. And, there are ways to leverage crypto here in the U.S., but the offshore market is where things just get wild. And you have to remember, obviously, cryptocurrency is a global asset class, right? People and all across the world are buying it, essentially. Yep. So that can move the needle. But offshore decentralized exchange Hyperliquid offers maximum leverage, get ready for this, of 40 times for Bitcoin and 25 times for Ether. And then Binance Labs linked Aster, again, another offshore decentralized exchange, offers as much as 100 times leverage, depending on the token. I mean, it is just crazy, the things that people are doing in cryptocurrency. And the reason it's so dangerous is because if a decline comes and investors need to unwind a position, it can create a cascade of selling that leads to massive losses. And it doesn't even just need to be a little bit of a loss, right? If you have double leverage on something, you can withstand a little bit of a loss before you get that margin call. But 100 times leverage, I mean, you get a margin call if it's down maybe 5% because you are so over leveraged on that.
Right. And 100 times, it's just ridiculous because your loss will be high. And the problem is that leverage has destroyed almost every major investment out of time. 2008, what happened? The banks were so over-leveraged because they're doing all these crazy loans and so forth. People were over-leveraged doing these loans. That caused a problem. Every time you look out and there's a major bust, it's because of leverage, where people get overexcited about these things. And you said 100 times. So if I put in, maybe sure I get this right. So if I put in $1,000, as a deposit, I can leverage up to $100,000 and make that investment $100,000.
Yeah, so you'd buy $100,000 worth of Bitcoin, essentially.
And so Bitcoin went down 1%, I just wiped myself out.
Yeah, I guess. Yeah, and I mean, that's the crazy part, right? Where, and this is also inflating the market, right? Because you don't need $100,000 to buy Bitcoin. And I think there are other cryptocurrencies that have different markers. I'm not sure if Bitcoin you can leverage 100 times on Aster, but they just kind of pointed that out. But again, using that example is you put in 1,000, well, now you get 100,000. So now you're pumping $100,000 into Bitcoin, and multiple people doing that. It's artificially lifting the price of Bitcoin because there's so much leverage in the space that there's really not, again, $100,000 worth of solid money in Bitcoin. There's one person that is crazy leverage in it that is, again, artificially almost lifting the price of that cryptocurrency.
And people don't want to hear it because like, oh, no, you're spoiling the party. It's just like leverage is not good. Whenever you have that type of leverage, even, and I think the banks back in 2008, I think I remember them being like 14-1. And when the collapse happened, was it Shearson Lehman, I think it was. Not BlackRock.
Well, Lehman Brothers.
Lehman Brothers, that's what I was thinking. Lehman Brothers, and there was another big one too, Washington Mutual. They were picked up by JP Morgan. So you get that domino effect where things just keep falling. And it's not just crypto market where people are gambling, though. We saw the return once again to the meme craziness with Beyond Meat producing massive gains of, this is one day, Monday, 128%, Tuesday, 146%. On Wednesday, the stock at one point produced another triple-digit intraday gain. but it ended up closing down 1% for the day. And when you look at the week, I think it started Monday, somewhere around $1. I think it was Wednesday, was very close to $7 a share. Friday closed at $2.19. How many people lost money because they bought in at $3, $4, $5, $6 a share, thinking, oh, this is going crazy, and that closes. This is just I think your odds are better in Vegas than they are playing with these meme stocks.
Well, I mean, you look at Beyond Meat. I mean, the reason it got so exciting, and there wasn't really much to it, it was that Round Hill meme stock ETF added them to their ETF. And that's what kind of started this whole process. And they announced a deal with Walmart to expand distribution to more stores across the U.S. So, yeah, I mean, that's a decent positive highlight, right? But definitely not to the magnitude that we saw. But again, the big issue is that short squeeze. More than 63% of the shares available for trading were sold short. So that's what kind of, I think, attracted people to it. And the funny thing is, this comes after last week, so not this most previous week, but last week, the stock tumbled more than 67% because the company announced it finalized a debt deal. So this business is taking on more debt. I think the fundamentals are deteriorating. And last week, it ended at 65 cents. So, I mean, yeah, it's up to $2.19 for the week. So you did pretty well if you bought it on Monday, or let's say last Friday, but it is just insane. I wanted to point this out too, was you talked about that Wednesday situation. At one point Wednesday, the high was $7.69 and it closed at $3.58. So that means somebody lost essentially 50% of their money during that time period. And then if they continued to hold, they said $2.19, not good. And the high for Beyond Meat was $230. I mean, this is just, again, a crazy, crazy company that has no business being up what it was up this past week.
And that's those meme stocks. Again, it's
not
exciting. It's not investing. It's just craziness that it's gambling.
Yeah.
Pure and simple.
And the last kind of instance of gambling that I saw this last week, and I was blown away by this, was nuclear power development company Oklo had a sizable pullback after the Financial Times noted the 500% advance in 2025 and $20 billion market value has come despite, get this, no revenues, no license to operate reactors, and no binding contracts to supply power. Now, if that's not a gamble, I don't know what is. And when you look at all this behavior, I mean, generally things like this happens when things get frothy and people start to reach and they get in over their heads. And I think that's exactly where we are today. And it's just another signal of, risky behavior in the market.
And that kind of reminds me of the biotech where, sometimes biotech companies just go crazy. They have no contracts. They have no earnings, nothing. And just because the potential of what it can do, they'll go up dramatically. Well, 500% advance, is just crazy with nothing there. But and nuclear does look like it's coming online down the road, I'll say. But it's just like to invest that much money that quickly, it's probably not going to be this company. That happened a lot during the tech boom and bust. A lot of companies like, oh, yeah, they're going to be part of it. They weren't. It was your bigger companies that actually did it, not the smaller companies.
Yeah.